Smart finance moves. Insight from CS and IP.
Unlocking IPO success. How to invest and secure full allotment. Introduction. Many investors are keen to learn how to get involved in initial public offerings, IPOs. This video will explore the critical process of applying for shares through brokerage accounts, understanding the IPO allotment process, and evaluating the associated risks. Join us as we demystify this exciting investment opportunity. IPO allotment process. Steps to apply for an IPO through a registered broker. Opening a brokerage account. The first step is to have a brokerage account. If investors don't already have one, you'll need to choose a registered broker that offers IPO access and complete the account opening procedure. Understanding the IPO details. Investor have an account, pay attention to the details of the IPO you're interested in, such as the offer price, share allocation, and the prospectus, which provides crucial information about the company. Submitting your application. Investor will need to place an order for the IPO shares through your broker. This can typically be done online or through your broker's mobile app. Make sure to follow the specific instructions provided by your broker to ensure your application is submitted correctly. Fund availability. Ensure that investors have sufficient funds in your account to cover the cost of the shares, as the amount will be deducted if you get allotted shares. The role of DMAT in trading accounts. DMAT account. A DMAT account holds investor shares in an electronic format. It is crucial for facilitating the storage and transfer of shares after an IPO. Without a DMAT account, investor cannot receive shares from an IPO. Trading account. This account is necessary for buying and selling shares on the stock market after the listing. Some brokerages offer a combined DMAT and trading account, making it easy for investors to manage your investments. Important. Both accounts streamline the investment process, allowing investors to quickly access and trade their shares without the hassle of physical certificates. IPO application methods. Online applications. Most registered brokers allow investors to apply for IPO shares directly through their websites or apps. This method is usually the most convenient and fastest way to submit your application. Through bank. Some banks also facilitate IPO applications. Investor can apply through your bank's online portal or by visiting a branch. This may be beneficial if you have an existing relationship with your bank or prefer their services. Traditional brokers. Investor can also opt to apply through a traditional brokerage. While this may involve more paperwork or time, it can provide personalized assistance if you need help navigating the process. Comparison. Each method has its own advantages, such as ease of use or expert guidance, so consider your preferences and needs when choosing how to apply. What happens if investors don't get shares in the IPO? Understanding allotment. It's important to recognize that not all applications will result in the allotment of shares, especially if the IPO is highly subscribed. The allotment process may be random or based on a ratio determined by the company. Waiting for the listing day. If investors don't receive shares, investor will simply wait for the company's stock to start trading on the stock exchange. On listing day, you can monitor the market for potential opportunities and price movements. Options after non-allotment. If investor application is unsuccessful, you can either choose to participate in future IPOs or invest in the company post-listing if you still believe in its potential. By understanding these key points, investor will be better equipped to navigate the IPO investment process and make informed decisions. Secret tricks for full allotment of shares in IPOs. If investor aiming for the best chances of receiving 100% allotment of shares during an IPO, here are some insider tips to consider. Apply early. Tip: submit your application as early as possible. IPOs can be oversubscribed quickly, so getting in early increases your chances. Example: if an IPO opens on a Monday, try to submit your application at the very start of the offering period, rather than waiting until the last day. Bid for fewer shares. Tip: if you apply for a smaller number of shares, your allotment chances might improve, especially in highly subscribed offerings. Example: instead of applying for the maximum allocation, consider applying for a lower number, like 10 shares instead of 100. Many small investors might miss out due to high demand. Use multiple DMAT accounts. If permissible by your broker and the regulations, use multiple DMAT accounts to submit separate applications. Example: if you have a family member with a DMAT account, consider applying through their account as well, This increases your chances of receiving shares across multiple applications. Apply through the Book Running Lead Manager, BRLM. Some brokers act as book running lead managers, which can provide an advantage in share allotment. Example: if your broker has a good track record with BRLM status, applying through them might increase the likelihood of receiving shares, as they often receive a larger allocation for their clients. Participate in fixed-price IPOs. Investigate fixed-price offerings, as they may have a more structured allotment process compared to book-built issues. Example: companies that price their IPO at a fixed rate can sometimes provide clarity on allotment, versus those that fluctuate based on demand. Research and attend IPO workshops. Tip: stay informed about upcoming IPOs and understand the companies you're investing in. Participate in online workshops or seminars about IPO investing. Example: attend an IPO investing webinar where experts discuss upcoming IPOs, providing insights that can help you choose better investment targets. Check for anchor investors. Look for IPOs with a strong list of anchor investors. This can signal a well-supported offering, which might improve your allotment chances. Example: if a reputable institutional investor is backing the IPO, it could indicate that the offer will likely be successful, leading to better allocation. Remember that while these tricks can enhance your chances of success, there are no guarantees in the stock market. Always perform thorough research and consider the inherent risks before investing in any IPO. Follow these strategies and you'll be better positioned to increase your chances of 100% or full allotment and make informed investment decisions. 10. If you found this video helpful and want to continue enhancing your investment knowledge, make sure to subscribe to our channel and hit the notification bell so you don't miss any updates. Stay tuned for our next videos. Thank you for watching and happy investing. IPO Basics. Learn subscription status, allotment, and GMP.